here, Vitale Wealth Management. This week's grading investment market update. All information is gathered as of the week of March 2nd. Hope you had a great week so far. Last week I was out at the end of the week. We went to Stonewood for some great tax strategies and looking at what's going to be happening, pending legislation and how it's going to affect everybody. So always on top of that. Let's talk about the major U.S. indexes, how it ended the week. They were all lower last week, led by the Dow, which was down 1.28%. NASDAQ was down 0.94%, and the S&P was down 0.42%. Now, in contrast, the international equity markets outperformed their U.S. peers, with international developed markets up 1.24%, and the emerging markets were up 2.83% for the week. On fixed income side, government bond prices rose last week, pushing the Treasury yields lower. The 10-year Treasury fell to the lowest level in over 4 months, settling in at 3.96% on Friday. At the end of January, the yield stood at 4.26. Now, in February, the U.S. markets were not able to maintain positive momentum, with both the NASDAQ and the S&P losing 3.3% and 0.9% respectively for the month. The Dow Jones was able to gain marginally at 0.2% for the month. Upcoming economic releases. The key economic data this week will offer insight of the labor market and consumer spending. Now, on Friday, March 6th, the monthly jobs and unemployment report will be published, offering the latest insights into the health of the labor market. Also on Friday, retail sales data will provide updated information on consumer spending trends. Looking at the market outlook, we're going to look in Q4, the quarter of 2025. Earnings season was largely in the books, and the constituents of the Magnificent Seven group continue to drive a broad share of the market's overall earnings growth. The seven stocks generated an average earnings growth of 27.7% compared to 9.8% for the other 493 companies in the S&P 500. Now, notably, earnings and growth in the Magnificent Seven have exceeded 25% in 10 of the last 11 quarters. Looking ahead for 2026 expectations, analysts are again projecting double-digit earnings growth for the broader S&P 500, with the expected growth of 23.5% for the Mag 7 and 11.8% for the remaining companies in the S&P. Over the weekend, in case you didn't realize it, the U.S. and Israel conducted a military strike on Iran. Investors will be closely monitoring the potential market implications in the days ahead. Historically, geopolitical events have tended to result in a short-lived market volatility. However, the impact will largely depend on the severity and the duration of the conflict, as well as whether it expands to other regions. Oil prices will also be a key focus, given the conflict between impacts the key oil supply routes in the Middle East, which the Straits are trying to close already right now. Energy Select portfolio was rebalanced last week as far as gradient activity. So the energy portfolio did a little rebalancing. Let's talk about other stocks in the news. NVIDIA, which is under the Core Select and G33, reported better than expected earnings, reported by strong holiday spending and continued momentum in e-commerce. However, the outlook for the current fiscal year fell short of expectations, and shares were down 7.5% for the week, which was a surprise. Everybody was going to say that was the big one everybody was looking at to see how that was going to perform. Also, Netflix, which is in the Core Selected G33, declined to meet Paramount Skydance's latest bid to acquire Warner Brothers, saying the deal is no longer financially attractive. And Netflix will receive a $2.8 billion breakup fee amidst the deal being called off. Shares were up 26.6% for the week. As you can see, the market volatility is on with the war with Iran, what is happening over there. The speculation, everything is going to be very short-lived, is with the hope. That's what we really want to see. We don't want to see this long, drawn-out thing. And if we've seen anything from our president, it's get in, get it taken care of, and let's go. So we hopefully will not see anything long running on this. It should hopefully just be a short thing. We're getting market volatility. We're seeing oil prices spike, but hopefully this too shall pass, and we know how to just stay the course and make sure that we're properly allocated so we don't have any issues. That's it for this week. If you need to get a hold of me, give me a call at 855-756-5700. Visit us at VitaleWealth.com. Thank you so much for being part of the Vitale Wealth family. God bless you. We'll see you again next week.